A very good evening to all of you. Once again, we connect with you on Tax Talk with Ranaweera Associates. So, as you know, the Tax Talk is all about talking about tax-related concerns, issues, investment opportunities, and all sorts of finance-related and tax-related topics. So, as usual, once again, today I would like to invite the Managing Partner, Chartered Accountant, Mr. Athula Ranaweera, to conduct today's tax talk session again. Good evening, Mr. Ranaweera.
Good evening.
So, Mr. Ranaweera, I think today we have a very interesting topic. It's conducting business with FDIs, so foreign direct investment, and related tax effects and foreign exchange regulations. Can you start by explaining why you selected this topic? Why about foreign direct investments? Because I think it's more relevant to either bigger companies or the government, but why would it be important to the individuals and other businesses?
Yeah, the main reason is that in recent past, we noticed that our currency is the currency against the dollar was changing rapidly. One day it came down to 94, and following day it went up to 106, and there was a change of 12 rupees and a fairly big variation. Now, when we from 194 to 206, 206 or 207, and such variation is affecting to our international trading. Why all these things are happening? Is it only because of this COVID? No, not only because of this COVID. Overall drop in the country, economic drop in the country. Now, day by day, our currency is depreciating against the foreign currency. Now, with that situation, for us to develop the country, how to overcome this? We need to develop the country. We need to do the various production, gross domestic productions, improve the production in the country. For that, we need investments. Without investment, you can do nothing. You may be having your knowledge, but you need the resources for other things. Now, therefore, I think as a country, we need foreign direct investments towards the country to develop the overall country. Therefore, I thought that with the current situation, this foreign direct investments towards the businesses in Sri Lanka, not for consumption purposes, is very much important. That is the very reason why I thought of planning for this topic.
So that means, Mr. Ranaweera, definitely by even individuals attracting foreign direct investment or smaller businesses attracting, it helps the fulfillment of the deficit of the foreign exchange that the government is going through at the moment. So shall we talk a bit about how to plan a business with whatever the available resources and what of institutions they need to deal with when they kind of look into foreign direct investment?
Yeah, now we are discussing about the businesses. The prime goal of a business is a profit ultimately. Now, therefore, our ultimate result should be the profit. Now, when we are planning to do something, aiming for a profit, we have to plan it very well to achieve that. Now, for that, the investment is very much required. The investment is very much required. Now, when we are making an investment, we may be having our own investment, or we may require some borrowed money. Then when we are borrowing money from an overseas party, we have to, they should be confident enough to invest in Sri Lanka. Therefore, we have to point out various plus points for them to invest in Sri Lanka, like the investment climate is suitable, and we have skilled and competent people to do that. We have market accessibility, the international transportation network. We are in a good place, and our location, the country-wise, is a small country, but we get all weather patterns. Then we have lot of tax incentives. Then we have the competitiveness, the productivity, high productivity in certain industries. Then the quality of life. Generally, when we compare our quality of life with most of the Asian countries, we are in a fairly good situation. Now, by quoting these things, we can promote foreign investors to the country. But as you mentioned, now when we are calling for this foreign investment, that is to do a business. Now, when we are doing a business, what are the requirements? Now, basically, the personal capability should be there. Now, if you don't have the personal capability, then you can't do a business. Best thing is to work under somebody else then, rather than wasting your existing resources. Then availability of resources, whether now you are capable, but if you don't have the resources, then there's a problem. But out of these resources, you need not to have all resources like knowledge, experience, connections, capabilities, funds, time factor. Now, you need not to have all these things. But if you are having the capabilities along with some of these resources, then you can do a business. Now, you may be having good knowledge in this business, or you may be having experience in this business, or you may be having good connection with politicians and big people in the country to get contracts and all. But you may not be having sufficient funds. You may not be having sufficient funds. Now, in a situation like that, what you have to do is, if you don't have your own resources, funds, then you may have to borrow from, obtain from other people. These other people may be local people or foreign people. The others may be locals or foreign. Right. Now, when it comes to foreign, we call it as foreign direct investments. Right. Then your time, availability of time is also important in this case. Then what are the other things? The factors to be considered when establishing business. What are the other things you have to consider? You have to have a formal entity. You have to have an entity. For that entity, you can register a company. You can incorporate a company in Sri Lanka. Under the Companies Act number 7 of 2007, you can incorporate. Then somebody might ask, why you are saying as a company? Why can't we have a partnership or a sole proprietorship? Yes. If you wish to, if you are starting in a very small scale, you can start with a sole proprietorship or a partnership. But for a big investment, you better go for a limited liability company. Then industry compliances. Now, certain industries, you have to get various other approvals, environmental approvals and various other approvals are required. Then you should be in a position to obtain these approvals. Certain approvals are not easy. As an example, suppose you are starting a tourist hotel just by the side of a school, then you can't get a liquor license for that tourist hotel because of the school or because of the religious institution closed. Then next is the tax effect. Now, when we take this, when we are doing a business, as I mentioned, the ultimate goal is the profit. Profit means gross income minus all expenses. The tax is also part of the expenses. Now, we first deduct the other expenses and calculate the profit. Then from the profit, we pay income tax. Then we are leaving with the balance, that is the tax profit net of tax. Right? Profit net of tax. Right? Therefore, we have to think about the tax because it is directly affecting to your profit. Right? Now, when we are considering the tax, there are few things for us to consider. Whether there are tax holidays, whether we can get the tax exemption, or whether there are any concessionary tax rates for that. Then whether whether it is subject to standard tax rates. Now, as an example, if you'll take liquor and tobacco businesses, the income tax rate is 40%. But if you are doing an IT business, there's a tax holiday for that. Or if you are doing agricultural farm business, there's a tax holiday. Therefore, when we are deciding whether to do a business and pay 40% to the government and satisfy with the balance 60%, or which is better, or whether we do a business, the business may be a little bit difficult, the agriculture, but no tax in that. Right? Therefore, the concessionary rates and what are the standard rates, those things we have to consider. Then effect to the business competition. Now, then if the tax rate is high, bit difficult for us to maybe bit difficult for us to do that business. Then foreign exchange regulations on investment. Now, when we are planning for foreign direct investments, we have to think about the foreign exchange regulations, that is capital transaction regulations, right? Then at the same time, when we are considering these things, there are some supportive agencies and related service providers for us to get certain things. And also there are certain entities where we can get some support services or some knowledge. Now, as an example, Board of Investment, BOI. Under the BOI, BOI is the country's investment promotional arm. That is the investment promotional arm of the country. Right. Then this BOI approval is open for whom? It is open for any person, whether resident or otherwise. Even for resident as well as non-resident person, BOI is open. Then what are the types of approvals? There are two types of approval. One is a basic approval under Section 16 of the BOI Act. Under that, this Section 16 approval is not suitable for Sri Lankan citizens, because this won't give any other attractions other than some recognition of the investments into the country. Therefore, this is okay for non-residents, but not for residents. It is useless to obtain Section 16 approval for residents. Right. Then comprehensive approval, that is under Section 17. Under that, we can get certain other benefits. Earlier, of course, they were giving even income tax holidays. Now there aren't any income tax holiday under BOI. But there are other benefits like import duty waivers, or if you are to start a place, now you may be in a position to get a location from a BOI zone with infrastructure. Then if you are having the Section 17 approval, all imports and exports could be linked through the BOI Customs Department, Customs section of the BOI, which is definitely easier than handling with the normal Customs Department. Now, these are the entities, but there are a few more. I will touch these few more also. The Export Development Board, EDB. EDB is for the development and promotion of exports. This is for export development and export promotions. Then we have IDB, Industrial Development Board, that is for the promotion or development of industries in Sri Lanka. Now, with IDB, we'll be able to get various technical knowledge, technical know-how of doing certain industries. Then Customs Department. Customs Department is the government agency acting as the mediator of all imports and exports. In addition to that, Customs Department facilitates the TIP scheme also. Under the TIP scheme, temporary import for export purposes. Under TIP scheme, there are two projects, schemes, TIP 1 and TIP 4. One is for raw material, import of raw material for producing some goods for re-export. Then tip 4 is for machineries, import of machineries to produce some articles for export market. Now these are governed under the customs department, but for you to get the tip 1 or tip 4 registration, first you have to get the EDB registration. Export Development Board registration. Once you get that registration, only you can go to the customs department and get the registration there. Then you can import either raw materials or machinery for this purpose. Then other agencies, there are few more agencies in Sri Lanka. What are those agencies? In the Revenue Department, of course, we are not much happy because everybody are afraid because we have to pay some more. It's a tax, it's a charge. Therefore, we have to pay something to them. Then business chambers and associations, various business chambers, business associations are there. Then government departments, boards and authorities like Tourist Board, Coconut Development Authority, Tea Board, like agencies are there, government related agencies. They are giving various support services. Of course, we are paying certain money for them, like levies and all. Then various research institutions. There are government research institutions as well as private research institutions. But only thing, why these research are important? For us to do something, we need data. For us to gather these data, we can obtain these things from research institutions. But the most important thing is the correctness of this data, because even very recently, we understood that one government research institution, the data or the information what they have given, service what they have given, is not up to that standard. Now, with that, I think I have well explained the background of investment, the things what we have considered and all at the time of starting a project, business.
Right. Mr. Ranaweera, I believe strategic development projects must be having more concessions with regard to foreign direct FDIs or foreign direct investments. Can you talk a bit about such concessions?
Yeah. Now, strategic development project I didn't mention here, but I would like to discuss the strategic development project that is governed under the Strategic Development Project Act. Governed under the Strategic Development Project Act. There's a small error in this year. Right? Here is correct. Strategic Development Project Act. That is under this is a special act where they are giving lot of concessions, which is superior than the BOI also. Now they are giving so many tax holidays and they supersede most of the other laws. As a result, if we are doing a project where we are in a position to get the strategic development approval, better to get that approval and go for a project like that. But here, what are the criteria they are looking for this approval? Now, the criteria are they consider about the national interest. Now, when we are proposing a project, the national interest of that project, that is very much important. Then the economic and social benefit to the country, not only to us, but also to the country. The economic and social benefit to the country. Then projects likely to change the landscape of the country. That means overall development of the country, which is leading to overall development of the country. Primarily through these are the things what they have highlighted. Substantial inflow of foreign exchange. Now we can see the biggest issue nowadays is the foreign exchange, lack of foreign exchange. Therefore, if somebody is saying that he is bringing foreign exchange and invest FDI and invest for a project where we can do lot of exports, huge exports, then that is a positive point for us to get the approval. Then second, substantial employment opportunities. Then giving 6,000 employments or 2,000 employments, things like that. Then enhancement of the income earning opportunities, the income earning opportunity, the enhancement of that or those opportunities. Then our people can earn more and more income, right? Various other services to these entities or employment opportunities or subcontract opportunities, things like that. Then transformation of technology. Now, when we take a country like ours, our people can easily absorb their high technology within a short period. But first, we should have that technology. Somebody should bring that technology into Sri Lanka. Then our people, within couple of days, within couple of months, they will learn these things. For that, somebody should bring the technology as a transformation of the technology in the country. That's now when they are giving these approvals, they consider these things, these main items, as the most important things for them to give the approval. Then we will see further on this matter few things. The BOI, now here the strategic development approval, it is linked through BOI. First we apply to the BOI. BOI looks into this project and see whether it is worthwhile for us to give the strategic development approval under that approval scheme. That is, now they consider it with the relevant ministry, relevant line ministry. They evaluate the project, right? Then the exemptions will be granted. Now, I said that a lot of tax exemptions and various concessions are there. These exemptions are granted depending on the volume of the business and the nature of the business. Exemptions will be granted for such project as specified in schedule to the Strategic Development Act. There's a separate schedule. You can refer that act. Then approval from the cabinet ministers and the parliament is needed. Then once they give the approval, ultimately the cabinet approval is mandatory. After giving the approval, the cabinet approval is a mandatory thing for that. That is a mandatory thing. Then, yeah, that's all with relate to the strategic development thing, because it's a very summarized thing. I think that is sufficient for the time being.
Sure, Mr. Ranaweera. So, can we also, like, it's quite important when you're doing business with foreign direct investments to know about the effect of tax or the various income taxes and the effects of them. Can we talk a bit about them?
Yeah. Now, anyway, whether we are dealing with FDI or even local funds, the tax is, when we are running a business, tax is very much important. Because as I mentioned at the beginning, tax directly affect to the take-home profit. Therefore, tax is very much important, especially in the case of foreign direct investments. Tax is very important for us to attract this FDI. Because now there are so many other countries who are inviting investors to come and invest in those countries. We are also competing with other countries. As a result, tax is also a very important matter for that. Now, first we'll see what are the tax rates applicable, what are the taxes in Sri Lanka, and what are the tax concessions available in Sri Lanka. Now, first we'll see what are the tax rates. Now, the standard tax rates. Now, very recently, the government announced certain changes, and now they have already issued a bill, and they have to pass that in the parliament. Most probably in next month, they will pass that in the parliament. Now, after incorporating those changes also, by incorporating those changes, we will discuss it. Yeah. Now, with those changes, the manufacturing entities, the income tax rate is 18%. Then ICT businesses, the income tax rate is 0, that is exempted from tax. Then Hospitality and tourism business, the tax rate is 14%, the concessionary tax rate. Then agriculture and food processing, they have broken that into two. One part, farming. If we'll categorize as farming, there's a tax holiday exemption. But if we'll take it as processing, there's a 14% tax. But as per this bill, they have given certain yardsticks to decide whether it is farming or processing. But I have noticed that those yardsticks are not practical. Some of the things, some of the conditions which should be there in farming has gone into processing. As a result, certain agricultural produce, even the primary produce, won't come under farming. It goes, as per the wording, it goes to the processing. As an example, if I'll take easy example, is maize. People are cultivating maize in Sri Lanka. Almost 95% of our maize is for poultry farming. Now, in the case when we are selling the maize, we have to dry it and sell. Otherwise, we can't sell. That means dehydrating. But unfortunately, the word dehydrating, they have gone and included in the processing. As a result, I don't know what will happen. The tax administrators might say, no, you can't get the exemption. As you have done the dehydrating, you have to pay tax at 14%. This is the weakness in the law. Right. Then construction and infrastructure projects, 14%. Then export, majority of export, it is 14%. It is called as specified undertakings, 14% concession rate. Then agriculture, fisheries, and now we'll see this tax holiday. There are tax exemptions for how long it is exempt. Now, in the case of agriculture, fisheries, and livestock farming, in the case of farming, 5 years. Offshore wind and floating solar power, 7 years. Boat and ship building, 7 years. Processing of milk powder, 5 years. They have given 5-year tax holiday because the milk powder processing is very much important for the country. We are importing milk powder, which is not a lucrative business. As a result, almost all dairy producers, they go for yogurt manufacturing, mainly yogurt manufacturing or liquid milk instead of milk powder. Then private educational institutions, 5 years. Startup companies, startup new companies by certain vocational trained people, 5 years. Recycling sites for construction material. Now, in the construction industry, there are a lot of wastage. Now, when there are wastage, if there's a company who is willing to recycle this wastage and use for the construction industry, then for that, the profit attributable to that recycling, there's a tax holiday of 10 years. How to separate is a difficult task. Anyway, this is the principle behind it. Construction and installation of communication towers. Now, communication towers also, now, as we know nowadays, this communication, internet, email, and all are very much important for us. Data communication is very much important. Therefore, to strengthen the communication facilities, we have to strengthen the towers and other equipment. For that, they have given 5 years. They have proposed a 5 years tax holiday for that. 5 years tax holiday for that. Then, with relate to this, I would like to talk little bit about the withholding taxes also. Few withholding taxes also. Now, most of the withholding taxes, they abolished recently. Withholding tax on investment income abolished with effect from 1st January 2020. Then, however, winning from lottery, reward, betting, gambling, of course, it is continuing. That, of course, continuing. At the same time, gem sale in auction is also continuing. Then, but even these withholding taxes are not there. If the recipient is willing to pay tax, they can pay advance income tax. They can pay advance income tax on voluntarily basis. Then income tax exemptions. Now we were talking about the interest exemptions. I have given some more detail on this. Agriculture farming without any process. This tax holiday start from 1st April 2019. Then providing IT with effect from 1st January 2020. Then services, export of services. If we'll export our services for the consumer to utilize that in abroad, then effective from 1st January 2020, it is exempted. Then any foreign sources, other foreign sources also exempted with effect from 1st January 2020. But this is not export of goods. It is not export of goods. It is any foreign source other than 3 above, where such gain and profit earned or derived in foreign currency and remitted to Sri Lanka. It is earned in abroad and remitted to Sri Lanka. Those exemptions, from which date it is exempt is also given. Then there are some more exemption, like interest income. Interest income of a foreign party or the interest on foreign currency deposit is exempted. Interest on foreign currency deposits are also exempted, right? Then interest earned by any person outside Sri Lanka also exempted. Now, interest earned by any person outside Sri Lanka on a loan provided to any person in Sri Lanka. Now, this is a plus point. Now, see, foreigners can come and open. First one, foreigners can come and open foreign currency FDs in Sri Lanka and earn interest. The second thing, foreigners can come to Sri Lanka. Foreigners can grant loans to Sri Lankan people. Foreigners can grant loans to Sri Lankan business. And then Sri Lankan business is paying interest. That interest is tax-free. If we'll obtain loans from an overseas party, when we pay interest, it is exempted, right? Then dividends paid out of resident company, out of dividend received. Now, if a company pay dividend out of dividend received, then secondary time, no further tax on that. Then next item is dividends paid by a resident company. Dividend paid by a resident company to a non-resident person. Now, this is also a very lucrative, positive thing for foreign direct investment. Now, if a foreigner come and deposit in a fixed deposit, interest is tax-free. If a foreigner come and give a loan to a local company even, the interest is tax-free. If this foreign entity or foreigner come and invest in a local company, and when the company declare dividend is tax-free for them. That's a very positive thing. That means ultimately what we are saying, all these are to promote the foreign direct investment. The next item, dividend from and gain from realization of shares in a non-resident company derived by any person having substantial participation in a non-resident company. Now, here what is covered is if we'll go and invest in another country. We are holding more than 10% of that company. If it is the situation when we earn dividends of that company and bring that dividend to Sri Lanka, then it is tax-free. When we bring that dividend to Sri Lanka, it is tax-free in Sri Lanka. Then amounts derived by any non-resident person from laboratory services and standard certification services. Now, if a foreign party come and start a laboratory services or standard certification services in Sri Lanka and earn profit, that profit is totally tax-free for them. Now, when we take all these things, now at the very beginning I said it is very much important for us to get the foreign direct investment. For us to attract the foreign direct investment, we have to show something. We have to show the attraction. Now, when we are showing the attraction, these few things are very much important. We can say in the earlier slide, I said, these businesses are totally tax-free. Even the local businesses tax-free. Now, agriculture, anyway, farming, then offshore, this solar system, this electricity generation, then boat and ship building, then milk powder manufacturing in Sri Lanka, education institutions, startup companies, recycling of waste materials, things like that. We said that tax-free. Then at the same time, we said no withholding taxes. Then we said the taxpayer, the exemption on interest on deposit, interest on loans, and dividends for them. By quoting these things, we should be in a position to attract foreign direct investment. I think I have covered that part well.
That's right. Mr. Ranaweera, it was quite important because we talked about the aspect of foreign direct investments, then we talked about the taxation and the effects on them. I think when you talk about foreign exchange, another important thing is to talk about the exchange control regulations. Do you think you can talk a bit about the Exchange Control Act or the implications when foreign exchange is brought in or taken out?
Yeah, with the availability of time, I will try my best to cover as much as possible in the foreign exchange. Now, as you mentioned, when we are talking about the foreign direct investments, to do businesses in Sri Lanka, that means we are thinking about the capital investments, that is capital fund, right? Now, under what law? First, we will see under what law it is regulated. It is regulated. The main act is Foreign Exchange Act number 12 of 2017. Foreign Exchange Act number 12 of 2017. Now, to support this act, there are certain gazette notifications issued subsequently. There are certain gazette notifications issued. We'll see what are the gazette notifications also. Now, the one gazette notification they issued in 2017, that is gazette notification number 204556. That is called regulation number 1 of 2017 under Foreign Exchange Act. This is a very comprehensive gazette notification comprising it so many pages, I think 40-50 pages. Then, but this gazette notification subsequently, very recently, they amended certain things in these gazette notifications. In February 2021, certain points of this gazette notification, original gazette notification, amended. Now, what has happened with these amendments? When we are considering some case, we have to study the new gazette notification as well as old gazette notification and the original Foreign Exchange Act, because only for certain things are amended, certain things are not amended. Now, then recent amendments. Now, amendment numbers, they call it as Regulation 1 of 2021, 2 of 2021, so on, up to 5. Then the gazette notice numbers, 22, 13, 34, 35, 36, 37, 38, 39, 40. You can get downloaded all these things from Central Bank website. You can get these things downloaded from Central Bank website or publishers, government publishers department. It is easy for you to get it downloaded from Central Bank website. Now we will see the details for what they have given these gazette notifications. Earlier, one comprehensive gazette notification. Now they have covered from each gazette notification. They have covered certain special sectors. Now, as an example, number 34, resident persons capital transactions outside Sri Lanka. That is, if I go and invest some money in India, we'll say, go and start a factory in India. For that, I need to send some money. Then I have to manage that under this gazette notification rules and regulations of these gazette notifications. Then after reading this, I have to refer it to the old gazette as well as the main exchange act. Then second gazette 35, it is for non-resident persons capital transactions in Sri Lanka. Non-resident person bring capital money into Sri Lanka and invest. For that only this gazette notification covers that type of transactions. Then 36 for immigrants. Now, lot of our people, they go and reside in abroad. When they are leaving the country for better, they need some money to be taken out from country. Therefore, there should be legislation to cover, manage those transactions. For that part, they have covered with this gazette notification. Next is 37, miscellaneous capital transactions. Now, some of these specially identified items are separately they have given, but this is covered so many other miscellaneous capital type of transactions. Then next one, foreign exchange accounts in Sri Lanka, capital and non-capital. Now, to activate these various transactions, different types of transactions, either we go and invest abroad, or some people, they come and invest in Sri Lanka, or we migrate and take some money out, and certain miscellaneous capital transactions are there. Now, to facilitate these things, there should be certain special bank accounts. Now, those special bank accounts are governed under this gazette notification. Then, movements of currencies. 39 is for movement of currencies, that is foreign and local currencies. It is to control the movements of these currencies. Then the last one is to define or control, mainly to define the residency situation with relate to Foreign Exchange Act. Residency situation with relate to Foreign Exchange Act. Residency, right? It may be different from immigration and emigration residency. Therefore, this covers those residency situation. I think the starting point of this, the governing laws, I have explained, I have listed down the governing laws with relate to the Foreign Exchange Regulations Act and the Gazette notifications. I think I have covered that area well.
Yes, Mr. Ranaweera, now we talked about all this, like the exchange control or foreign exchange regulations and the interest, or rather the taxations and all that. Can we also talk about how to accept and how to handle FDIs?
Yeah, for that, I think that is very much important. Now, we need foreign exchange. We know there are governing regulations, laws. Now, then, to suit with our requirement, we should identify the various conditions, limitations in these laws to facilitate our requirement. Therefore, I would like to talk on certain important things with relate to the foreign exchange. Now, we are talking only about the capital transactions, not revenue transactions, capital transactions. Now, capital transaction, as I mentioned, I have already explained. If we are sending money out of Sri Lanka for investment, we need to send those money through a special bank account called outward investment account. Outward investment account. This account is the account maintained to monitor the funds sending out and bringing back as capital transactions. Okay. Then we'll see the situation with relate to the funds bringing the FDI into the country. For that, there's a separate account called inward investment account. Now, if a foreign party, non-resident person bring money to Sri Lanka to invest in Sri Lanka, that person has to bring that money through IIA account. This OIA and IIA, you can get open these accounts with any commercial bank operates in Sri Lanka. Under any name, any commercial bank operates in Sri Lanka, facilitate of opening these accounts, OIA as well as IIA. Right? To get open these things, it is not a difficult task. It is very easy for us to get open. For a foreigner, if the foreigner want to open an IIA account, what is needed is only the passport. That's all. Passport. By producing passport, he can get open this account. Once open, at the time of opening an account, you need not to deposit any money. First, you have to open the account. Then only you have to deposit money. Generally, this money to be remitted directly from overseas. Generally, it is to be deposited directly from overseas. There are few exclusions, but generally, it is to be deposited directly. Right. Saying that, I would like to move towards to who can open an IIA account, especially IIA account. Who can open it? Now we'll see who can open an IIA account. This is very important. I might think, why I can't open? Can I open an IIA account? Right. Now we'll see. A non-national, that means not being a Sri Lankan, resident in or outside Sri Lanka. That means under that category, only citizens, the Sri Lankans can't open. Here, under this category, Sri Lankans can't open. It has to be non-national. But there are some more points we will see. Under this, no, not for Sri Lankans. Right. Second point, a Sri Lankan dual citizen. Under that point, you can open only if you are even a Sri Lankan citizen. If you are having a dual citizenship, then you can open a IIA account. If you are having a dual citizenship, you can open. Then third category, Sri Lankan national who has obtained permanent residency status or citizenship in another country. A Sri Lankan national. He has obtained residency in another country. Then that person can, even he is a Sri Lankan national, he can open a IIA account. The next category, the Sri Lankan citizen employed abroad. He's a Sri Lankan citizen. Employed abroad, resident outside Sri Lanka. For the employment, he is residing outside Sri Lanka. We know a lot of our people are working in Middle East countries for years. Then they are residing in those countries, but the purpose of this staying in those countries is the employment. Then you can open. Then now Sri Lankan citizens employed abroad, why it is important for them to open IIA account? The advantage, if they'll send this money through a IIA account and do a business in Sri Lanka at any time, they can repatriate this money back to another country. That is the advantage. When a Sri Lankan citizen, it is very important because with the currency, with the devaluation of our money, I think for them it is better to bring through IIA even and do businesses. Bring through IIA, deposit in a foreign currency bank account, then pledge that foreign currency bank deposit, obtain loans from the local bank and do a business. That is the best. Then currency devaluation risk is not there. Then the next, a company incorporated outside Sri Lanka. Any company incorporated outside Sri Lanka can open. Then country funds, regional funds, mutual funds, unit trust and foreign investors established out of Sri Lanka, outside Sri Lanka. Then next, an administrator or executor of the estate of a deceased person. The specialty of this deceased person is who maintain an IIA with the authorized dealer. Then the administrator or executive also can continue or open another IIA and transfer these funds. A receiver or liquidator of a company that maintain, in that case also, that maintain an IIA account with the authorized dealer. That is also, that person also, it is possible. Now we'll move forward to manage with the little time we have. Permitted investment. Now we'll see what are the permitted investments. Now we know who can open. Next step, we will see what are the permitted investment. Any person resident outside Sri Lanka may engage in the following capital transactions, subject to the exclusions and limitations: invest, acquire, hold all classes of shares, any classes of shares of a local company, any classes of shares of a local company, they can come and invest. Right? But there are some subject to certain exclusions and limitations. Those things we will discuss later. Then invest. The first one is shares. The invest or acquire or hold all classes of shares in a company not incorporated in Sri Lanka but listed in Colombo Stock Exchange. Now, Colombo Stock Exchange, an overseas company could be can list in Colombo Stock Exchange. If there's any company like that, a foreign party can come and buy the shares of that company. Right. Then third, see, invest in debt securities, granting loans with a tenure of 3 or more years. Now, to a company incorporated in Sri Lanka, a foreign party can come and buy debt securities like debentures, or they can give loans to a local company, In the case of loans, the tenure of that loan, the time period should be minimum of 3 years. Next, grant loans or invest in debt securities issued by foreign country or LKR, foreign currency or LKR, subject to approval. Grant loans or invest in debt securities issued in foreign currency or LKR. Either currency, no problem. Grant loans, that is possible. Next one, units in a unit trust, mutual fund, government securities, securities of CBSL, and things like that. Also, you can invest. That is also permitted. Then we will see, now as we learn these things, next step, we will see what are the prohibited, because the earlier slide I said, investment, I said subject to limitations, we can do various things. Subject to the limitations, we can do various things. Now here I mentioned subject to exclusions and limitations we can do. Now we should know what are the exclusions and what are the limitations. Now we'll see those things. Prohibited or excluded industries. What are the prohibited industries? Pawn brokering, coastal fishing, retail trade with less than 5 million capital contribution by them. Now, in these three categories, they can't invest. But in retail trade, they can invest. If they are willing to invest more than 5 million, they can do that. Then this is the prohibited or excluded industry. Next is foreign ownership restricted to 40%. Certain industries, the foreign ownership can go only up to 40%. Now we'll see those things. Those are the restricted areas. Production of goods where Sri Lanka exports subject to internationally determined quota system. Now, especially for garments, at that time we had this. Now, in a situation like that, they can't invest more than 40%. Then the second thing, growing and primary processing of tea, rubber, coconut, cocoa, rice, sugar, spices. Growing and primary processing even for a tea factory, you can't do, foreigners can't invest more than 40%. Then mining and primary processing of non-renewable national resources. When it is non-renewable, there's a scarcity. Therefore, there's a limitation of these national resources. Then timber-based industries using local timber. timber-based industries using local timber because there's a scarcity. We are worrying about our jungles. Now, to avoid destroying of jungle, they have in this law, of course, exchange law, of course, they have brought this. But practically, every day we are losing the jungles. But here under exchange control, Foreign Exchange Act, this security is there. Then deep sea fishing, also 40%, but you can get special approval for even 100%. That is, you have to get a special approval. Now, saying that, some more items are there. Mass communication, 40% limited. There are education, 40% limit. Freight forwarding, 40% limit. Travel agencies, 40% limit. Shipping agencies, 40% limit. For all these things, 40% limit is there. Then there are some sectors where these limitations, there are few sectors where these limitations could be bypassed by getting a special permission. From the government of Sri Lanka. We'll see what are the sectors. Air transportation. If a foreign party is investing in air transportation, we have to get special permission from the government. Next is coastal shipping. Not deep sea, it is coastal shipping. Right? That is due to various reasons. One is the security of the country. The other thing is, as it is coastal, our people can manage it, like sending goods from Colombo to Jaffna. For that, these foreign parties, if they are to engage in that, they have to get special permission. Then manufacturing arms, ammunitions, things like that. If you are manufacturing these type of things, you have to get a special permission from the government. Next is manufacturing the things like these narcotic, alcohol, dangerous drugs and all those things. If you are manufacturing poisons or things like that, you have to get a special permission. Some of these things, it is needed for people, then you have to manufacture. But if a foreign party is investing in a company like that, should get special permission. Then producing currency, coins or security documents. Now producing that is printing or producing of these things, you have to get special permission. Then large scale mechanized mining of gems. Mechanized mining of gems is also we only wait for a special permission. Then the last is the lotteries. If they are doing lotteries, they have to get special permission. I think with the available time, I managed to explain the basic things with relate to the Foreign Exchange Act, with relate to the capital investment, that is direct foreign investment towards the country. With that, I think, I explained that. Now, if you need to apply these things for a specific purpose, what you can do is to refer the related acts and other regulations. If you have any questions, at any time you can send those questions. You can email those questions to my email addresses. Then within a reasonable time period, I'll be able to answer these questions. Yes.
Yes, so as mentioned by Mr. Ranaweera, please contact him. You can see the email addresses on the screen, the phone number on screen. So I think it was a very important session today, and thank you, Mr. Ranaweera. It was a great insight into foreign direct investment into businesses, the relevant taxation, the foreign exchange regulations, and then finally how we can attract it and what authority to get in touch with. So it was a very insightful session. So we always, as we say, please follow the Tax Talk YouTube channel or go to Ranaweera Associates on Facebook. and follow the page, like the page, because there's so many content that comes on with related to tax and financing. So please get in touch with Ranaweera Associates if you need any consultancy or any support. Mr. Athula Ranaweera and his capable team is there to support you. So with that, I think we'll end today's Tax Talk episode. Thank you very much, Mr. Ranaweera. Have a good evening. And we thank everyone who connected with us on today's session.
Okay, I would like
Thank
to thank Nahas as well as all participants for allowing me to share my knowledge with you. As I mentioned, please, if there are any questions, please comment those questions, email those questions to my email addresses. Thank you very much.
Thank you very much and have a good night.
Good night.